Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. Happy Saturday, April 4th, 2026. Before we get to today's signal of the day, let's use this Saturday to zoom out because if you don't understand what's happening in the Strait of Hormuz, you're trading blind. Before we start, BuzzPulse is a social intelligence tool. Everything you hear today is data and commentary, not investment advice. I'm not your financial advisor, so please do your own research before putting money anywhere, especially in the Strait of Hormuz. Now, the Strait of Hormuz is a narrow waterway between Iran and Oman, 21 miles wide at its tightest point. Before this conflict, 20 million barrels of oil passed through it every day. That's 20% of the world's seaborne oil trade. 1 in 5 barrels travels through this choke point, and you could almost see across it. On March 4th, Iran declared the Strait of Hormuz closed and backed that with attacks on merchant ships. Tanker traffic collapsed, first by 70% and then effectively to zero. Insurance premiums skyrocketed. Major shipping companies pulled out entirely. And why does this matter to your portfolio? Because energy isn't just a sector, it's an input cost for every sector. So oil going from 80 to over $100 reprices transportation, manufacturing, and consumer goods. When consumer prices rise, the Fed can't cut rates and growth stocks lose their tailwind. Now, that's the transition mechanism behind every volatile session for the past 5 weeks. This week crystallized the tension. Tuesday, President Trump said he expects U.S. forces to leave Iran in 2 to 3 weeks. Wednesday, stocks rallied on ceasefire hopes and oil briefly dipped below 100. Then Wednesday night, President Trump addressed the nation, said the war would continue for weeks. Then oil surged back above $108 a barrel. Thursday opened with the Dow down over 600 points. But here's the lesson. Despite all of that chaos, the market showed resilience. By Thursday's close, the S&P posted a 3.4% weekly gain. The Nasdaq climbed 4.4%. First positive week since the conflict began. The market's starting to price in a resolution, not because one exists, but because the range of outcomes is narrowing. Now, let's talk about what BuzzPulse found this morning. Today's signal of the day is BMNR, a mid-cap equity trading around $19.45. 9 independent convergence layers fired simultaneously. Buzz surge Z-score of 2.8 with momentum confirmation. Sentiment at plus 0.37. Buzz price divergence showing attention building faster than prices moving, and unusual options activity confirming institutional directional intent. BMNR is a Russell 2000 and S&P 400 component with 5% short interest, not squeeze territory, but a clean technical setup with institutional backing. Now, earnings hit April 14th, 10 days out. And remember, OPEC Plus meets tomorrow. If Hormuz dynamics shift, the entire risk appetite of the market shifts with it. Watch for continuation above $20 on volume. Supporting signals ranked by alpha potential. PUMP, a small cap at $13.94, a Z-score of 15.5, the highest in today's data. Greed score 0.550, but the catalyst is ticker mention with no context. Pure social momentum, no fundamental driver. 12% short interest could add fuel if the stock moves, but you're betting on crowd behavior, not company fundamentals. Momentum specialists only. DJT mid-cap at $9.18, the Z-score 4.8, sentiment negative at minus 0.25, but unusual options activity shows institutions positioning despite bearish chatter. IV rank at 100%. Options are as expensive as they've ever been. In a week dominated by President Trump's war rhetoric, that headline risk is priced into every candle. DJT is a trade, not an investment. And right now you're waiting for clarity, not chasing chop. RUM, a mid cap at $4.98, a Z score at 4.0, sentiment is at 0.50, as bullish as this system gets. Rumble showed up as our signal of the day on Thursday with an 11.9 Z score. The fact that it's still generating signals tells you social attention is sustained, not fading. Pure momentum and sentiment play. No options data, no short interest, no earnings date. Trade the chart and the buzz or keep it on the watch list. AMC, small cap at $1.12, 22% short interest. IV rank at 100%, Z score 2.7. AMC appeared in our supporting signals 3 days this week. Retail coordination is persistent. That's behavioral finance at work. In a stressed market, retail gravitates toward familiar squeeze candidates. If it breaks resistance on volume, shorts cover and the move accelerates. If it stalls, expensive premium bleeds fast. Tight stop or don't touch it. SSNLF, Z-score 5.2 at $65.21. Catalyst is the Galaxy Watch blood pressure feature launch with cautionary tone on accuracy. Sentiment fairly positive at plus 0.20. This one is for watchers, not buyers, until a secondary catalyst confirms product traction. Let me close with next week's framework. VIX at 23.9, down 13% over 5 days. Fear is easing, but not gone. And in that environment, fresh convergence signals carry amplified weight because capital is looking for a reason to deploy. 2 dates on your calendar. Tomorrow, OPEC Plus meets. Any production adjustment directly impacts the oil story I just walked you through. Thursday, CPI drops. With gas above $4 a gallon, that print could come in hot, pushing rate cut expectations further out. Size accordingly. This was a week where the market proved it can rally into uncertainty. The strait is closed, oil is still above 100, but the first weekly gain since the conflict began tells you something is shifting beneath the surface. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.